Hello, everyone. Today is February 15th, and this is excitingly the first session of the Tape Reading Lab with William Reardon and Roman Bogomazov. Um, we kind of had this uh, planned for quite some time, William, right? Um,
Yes.
After the Tape Reading series, which was a big success for Wyckoff Analytics, and specifically, I would say like for William and I. And obviously, that was so sad. It was extremely sad. And every time I think about this, and even today, somebody wrote in I think either on YouTube channel that, David passed away during that whole tape reading series. And it was heartbreaking. We're still trying to kind of like go forward without him, but with his presence, and we will be referring, to him a lot.
Yeah.
I've asked William, maybe just to deliver some material on his David Wise wave at some point in this
He
sessions.
certainly lives through me, through his work, through
Mm.
me. It's been a huge influence for
Yeah,
many Wyckoff around the world.
absolutely, absolutely. So, what are we gonna do in these sessions? So, obviously, the first couple of sessions are going to be free. We're just trying to figure things out, but we are gonna analyze the market from the tape and chart reading point of view. Uh, I think that William is at the top, of the tape reading, chart reading, chain for us. So we're obviously very interested in his opinion. I love tape reading and chart reading myself, as you guys know. So, and we had a lot of comments from you, positive comments about our interaction during the tape reading series, and this is where the idea came, just to continue that. And I'm so happy to do this, and I'm so happy that William has agreed because, well, we kind of click, and you guys will notice this. We have so many similarities. I would say, like, maybe William stylistically, like some differences there, right? Some differences in the analysis, some differences in execution, especially. So you will
Yes.
see kind of maybe like different styles, but they will be complementary. And what we will be doing is, as we were preparing and talking about these sessions, we just want to talk. We just want to put on the chart and talk about the chart and just analyze
Yes.
and extract the information from there. So for you, this is going to be more of kind of listening to the conversation. And then obviously you will have the capacity to ask questions. So that's for sure. William, what are your thoughts on the sessions? What are you expecting or not expecting? I don't know.
Well, I expect in-depth conversations that
Mhm.
probably aren't really shared anywhere else. About we will go to the nth degree of the price volume relationship, the tape reading
Right.
aspect of our profession. And I think that raises an important question: tape reading versus chart reading.
Absolutely. And why don't
Uh,
we just even start with that, William? So, what's your take? What's the difference for you between tape reading and chart reading? And if there is any?
well, it's funny. I mean, the definition of pure tape reading as the study of price and volume, and that is what we do essentially. Yet it's reflected on the chart via a bar. But back in the 1860s, 1890s, early 1900s, they didn't have the capacity, they didn't have the electronic means to represent the bar. They didn't have intraday trading, etc. So they would solely look at the tape, the ticker tape. And the purists, oh,
Yeah, I'm here. I'm here. Go ahead.
oh, sorry. Yeah, the purists amongst us who define chart reading and tape reading, I think personally they can be amalgamated like VSA / Wyckoff.
Hmm.
All of our principles, concepts, they work. Uh, I guess for the purists amongst us, they don't like to, pure tape readers do not need to use the chart, okay, as we do.
Hmm.
However, I think in the modern world, like I said, with electronic ability and the capability of trading from your phone these days, I think the representation that it displays on the chart, which is the end result of tape reading, is that you can see the supply-demand balances very efficiently. You know, I don't know many people who can tape read 20, 30, 40 markets, instruments at a time. It's
Yeah, you kind of stuck to a screen, right? Right there.
you're stuck to a screen, and
Mhm.
what are your thoughts, Remy?
And by the way, William, I mean, like, let's kind of like go into the what tape reading is, right? So you're not looking at the chart.
No.
You're looking at the quotes coming in at bids and ask, and then you
Yes.
look at the volume of bids and ask, and there are quite a few techniques there that one
Mm-hmm.
could utilize to figure out the directionality and also the potentiality of the reversal, and it's very effective. But you gotta have to like look at that and continuously read the tape. The second read taping to me, William, was always about like those um, old pictures with
Yes.
people man standing around the tape,
Yeah.
right, reading the
6 men
ticker.
with the little brass tape. Yeah.
Yeah, and to me, this is probably much closer to chart reading to what we do because they would receive on the ticker the symbol, they would
Mm-hmm.
receive also the volume and the price.
Yeah.
So in a way, this could be transitions into the chart and kind of be seen in the same way. You could do this with PNF effectively, and I mean David has
Yes.
shown us many times how he did that. Um, and then obviously there is a chart reading. So I would just say like three different ways of how we could read the tape and read the chart. And yeah, as you mentioned, there are a lot of like purists that would almost kind of like attack us and would say like, this is not tape reading. No, it's not tape reading. It's reading of the tape based on the chart representation of the tape.
Yes.
So,
The visual format, which I think personally, I don't have the concentration skill set
I don't
to
have
be
time
able to
even.
monitor the tape.
Yeah.
I mean, I've tried many years ago.
Mhm.
It's the You're so focused, and it's a completely different skill set. It's
Mhm.
you don't even use the structure of the market. Uh, You know, it's but I must with tape reading though. I think the longer the time frame, the less relevant it is. I think it is it's more suited towards smaller time frames for sure.
Absolutely.
You can identify large um, reversal moves, like you said. I think reversals are very good on pure tape reading. However, you must take notes and understand where those levels are. It's very complicated, and I don't think it needs to be done in this day and age when we have the visual representation and we can.
Well,
We
one
can.
thing about pure tape reading, and I've dived into that and kind of studied it for some time. What I
Yeah.
find it's very interesting, William, is that tape reading is extremely accurate. If you kind of like gain the techniques, you understand that. I mean, you really could have a series of trades, short-term trades, that is, right? So that lasts
Yes.
for minutes,
Yes.
where you could be extremely accurate. Having said this, I mean, this is definitely not chart reading. And I would say that in our studies with William, we're going to be concentrating on charts. I mean, like whatever you guys see from us, on the daily basis with William's reports or our reports, they always include the charts. And we're going to look at the chart
Yes.
as the representation of the information from the tape that came, and then we're going to read it. All right. Okay, well,
Mm.
and will any other final thoughts on this? Something to add?
No, I'm looking forward to going through these charts with you, hearing your
Okay,
perspective.
yeah. Well, what we thought we would do is for each of these sessions, we would go through the market and from the, tape chart reading. And so we're going to use these two words, here and there. And, you guys already know our position on tape reading and chart reading. So I'm just going to be probably saying tape reading, it's just I'm used to that more.
Although I must say that we can be incredibly accurate with entering via chart reading as well, identifying the supply-demand imbalance. and you can drop down to lower time frames. You can be incredibly accurate.
Well,
Yeah.
okay, so tell me, William, because this is exactly what I kind of was envisioning these sessions to be. This is a conversation with the colleague, and as you and I, we've talked a lot, quite many times already. So we always provoke each other with this type of questions. So, what is it when you say accuracy, with high accuracy reading the chart? So what would that accuracy be for you, William? I mean, like,
For
what is
me,
your standard?
high accuracy is entering at the danger point where risk is least, where there is overt strength or weakness in the background, where you've determined the background condition, and you enter on the opposing force. So, i.e., if we're trending higher and we get a good solid move and we react to a support, say with very narrow spreads, low volume indicating no supply, that's the danger. You're right at the danger point where you're disconfirming supply in a bullish environment, and that there, where through disconfirming supply, we get the confirmation of demand, and that little small turning point is, I think, is extremely accurate.
Well, why don't we even do this as an exercise right now, right? So, how about this spot right here? So,
Yes.
I've talked about it, in multiple classes as it was happening, and we have identified that with students as a bullish absorption on the way down. But I would love you to go through this and give us maybe like bar by bar analysis of what you're seeing here as an example. And this is the accuracy that you're talking about. It's just the accuracy of coming in at the specific spot that identifies the timing of the next much larger move. I also was asking you about the accuracy from the perspective of like, what is accurate to you? I mean, like, 50%, 60%, 70, 80, 90, so maybe we could come back to this question. But first, could you just walk us through this?
Well, yes, I don't have my mouse. Okay, yeah. Well, the first down bar, obviously, we
Oh,
encounter.
hold on a second, William. Let's correct this. Let me just make sure that you could draw, and then you could pick up the pen.
Okay.
Can you do that?
Yes, there we go.
Okay.
So this bar here, we encounter supply. And we can see that we would expect that we have some shortening of the thrust to the upside. We don't get any follow through to the upside on this bar where we do break into new highs. But then obviously this is a level here. And next bar, we encounter, well, how would you analyze this bar? I know what I think for this bar.
Which one? This one right here?
The second bar,
Okay.
the green
Well,
bar after
effort versus result, yeah, volume is increasing, meaning that both supply and demand is increasing. If demand is increasing, that, as you guys know from WTC courses, we are into the stop-in action, potential change of behavior, potential reversal, potential trading range. So those are the kind of like the four things that we would be expecting with that bar. Spread is smaller than the previous down bar, and volume is bigger. So more effort to push the price down, inability to do so contextually in the area of the support, presence of the demand, suggest absorption. And by the way, William, I mean, like, if I would be looking at this whole series, demand on this bar, demand on this bar, demand on this bar, demand on this bar, and ease of movement after that bar. And I thought that this bar right here was such a great ease of movement confirmation. Oh my God. Just over this bar right here, over the first attempt to rally. And that just showed that we're not only going to reverse, this is the timing for the rally that's going to overcome, this area right here. What do you think about that?
Well, I completely concur. I also like the way it tests support here. Lovely, get a spring. But what's interesting here is we speak about this in these classes. This effort versus result bar here, we could either have, what I'd like to see here is either A, effort versus result, or B, volume down here, which would signify no supply. And I think that's quite interesting from our perspective because they say they both show strength. I personally prefer to see a lack of supply disconfirming, disconfirming the selling force. However, overt volume coming down here shows a willingness of obviously buying participants there. I wouldn't say it's bag holding. The volume's not high enough, but kind of along that same thought process. And then it's showed nicely, as you said, by ease of movement on the following bar. This shows there's a lack of selling force. Do you have a preference as we approach these levels? So you can either approach support with a lack of volume, very low volume, or overt volume, which we have here. This is
okay, so very good question, and this is what I was looking for from this session. This conversation with William that we usually would have. What's your preference, right? Wow. What's your preference? Is it diminishing supply character where the volume goes down, or where the volume goes up, identifying that demand is actually increasing at that spot? So I think, William, for me, I just go back and forth between those two.
Okay.
Because I see the value of the increase of the volume signature, and I'll explain why.
Okay. I'm interested in hearing.
As the price goes down and the volume increases, what that suggests to me is that weak hands are capitulating.
Yes.
And they're capitulating, and supply is increasing. They're capitulating this kind of like weak supply. And there is a transition between, the weak hands and strong hands, and supply transitioning to strong hands in that moment. So with that, the absorption kind of suggests that it's absorbing whatever the last supply that was not absorbed in this area on the way out, where up when we had the vertical absorption. So it's almost like a necessity for the volume to increase, and necessity for that supply to be absorbed in order for us to start moving above these levels with more momentum. Does that make sense?
It does. Yeah, it does make sense. I think for me personally, I prefer to see a lack of supply purely for the fact that it's tested less frequently. As you know, high volume bars do like to be tested. So from a general rule of thumb, if I was to pick a reaction to support, I do prefer to see the lack of opposing force. But what's interesting about this action over here is this effort versus result bar and the ease of movement bar. I think they're like a two bar combo. They work together very nicely, if that makes sense. The way that it tests, and you can not bullish engulfing, I don't really think in those terms, but the way it closes very firm, and the very notion of these two bars where we see the high volume, we know buying because we're reacting, we know there's a lot of buying in this bar, and then the very fact that we dip down to reverse and close firm, we print a wider spread and lower volume with the ease of movement, works very nicely as a two bar combination, which is very different. Again, it's a different perspective as if we were to come down with a narrow spread and then dip down to reverse and close firm. But I understand your thoughts.
Well, that's just a temporary preference, because you go back and forth. I think also, for students, and this is what I'm seeing a lot, and I'm sure that your students also kind of like ask the same question. Whenever we have this type of action where the volume signature increases, and there is kind of like this active capitulation by weak hands, absorption of that capitulation by strong hands, usually what I see is the exhaustion afterwards, exhaustion of force. And this is what's so highly misunderstood by amateurs and by beginners, is that after this type of event, which is basically a collision, to me, I'm thinking always like William universe, and you and I, we're going to go into the existential stuff, during this session, because both of us like this stuff. So to me, that's like a collision in the universe. Two big, massive bodies collide, and one wins. But because of that collision, both are exhausted, and especially the one who is winning. In this case, this is demand. So on the way up, we're not going to have that, aggressive demand, and there is no need for that, because supply has been dealt with. And this is such an interesting concept that is being so misunderstood by so many students. So the questions that I was getting throughout, this couple of weeks as the price was going up, and I'm sure you did as well.
Yes.
It's just like, why are we going up without the confirming signature? Why are we going up and then the spread is diminishing? Well, my answer to that was that, okay, well, look at what has happened prior to that. Think about the structural analog of what needs to happen next. If this is absorption, then it could be absorption on the way down and on the way up, with kind of like this pattern where we go down, we go up, consolidate, and continue to the upside. And this area right here could be potentially very small. And I'm kind of like seeing that this is what's happening here. What are your thoughts on the rise off the bottom here?
Well, the rise of it's a very, very popular question. And I too have had to address the very notion of not only do we rise on low volume, which people indicate we should have increasing volume and increasing spreads
and by the way, why do you think that is? Why do you think people just so stuck on this idea that the price has to have the volume signature to go up?
I think it's ingrained. I think it's just what
because of technical analysis, right? Because this volume needs to confirm the price. So if the volume does not confirm the price, then it's an opposite signal. And to me, this is so erroneous. That's number one, and ironic. Because to me, the volume actually confirms. By decreasing the volume signature, the volume actually confirms the movement of the price. Does it to you?
Yes, yes. I mean, I think it's a lack of contextual understanding. Like ordinarily, it's very contextual dependent. Like ordinarily, volume decreasing like this and spreads decreasing if we're approaching a heavy resistance area and we break down, then I'll be reading this as a no demand rally. But the fact here that we've broken through and then we have directly behind us, we have this turning point on these two bars, effort versus result and ease of movement. We don't first of all, we don't need to see, again, another popular question is we're breaking into new highs. To be a valid break, we need to see a wide spread with increasing volume just on the break. But we don't need to. Why? Well, because the very fact is there is no selling force in the market. It's been eradicated, which is displayed by the second bar here of the ease of movement. So as we push on up and volume decreases, it isn't no demand. It's a very advanced concept and a very, very popular question.
Absolutely. Okay, well, what are your thoughts, William, on this bar right here? So, as I was looking at that, obviously supply comes in here, right? So supply has increased. Now, let's right away establish the characteristics of this particular supply that's coming in, and also let's also don't forget the context that William talked about. So we're seeing that supply off the top is less than in any of the cases of this vertical absorption rise that we have had since the last major supply that came in at the level of the resistance. So to me, that shows actually a lot of bullishness as selling is less. And not only selling as the force is less, so the effort to the downside is decreasing. Also, look at the result. I mean, like every time we had those type of spikes, right? So we have like something significant to show for the movement to the downside, and yet this one was extremely bullish result. There is no continuation to the downside. Not only that suggested continuation to the upside, but I think, William, here, and I'm gonna kind of like make this call. I think that we're going into the melt up phase, and we're gonna probably like on Nasdaq gonna go to like 15.5, 16,000. I had some PNF on that, and we're probably gonna have some kind of melt up. I see a lot of my positions at being at the point of acceleration. As the next bars are gonna come. So what's your take on that particular bar?
Well, first of all,
you
know what I'm going to say here. What does this bar achieve with this volume? It doesn't achieve anything, does it? I know it's kind of saying effort versus result, but for all this volume, it doesn't achieve anything. So therefore, instant flag. And again, it's just the contextual nature. What I see here is a test, breakthrough. Okay. Now the market has the right to react down here. Yet this is the pullback because we're pushing into new highs, which is bullish. So I see that bar there. And well, again, as you said, using the comparative and relative analysis, using every bar that we've come up and we've encountered the supply, okay, this here has the lowest volume. So once again, using our deductive tools of analysis, we can see that this reaction here. Sorry, can I clean the screen here?
Do you want to clean this up, or?
Yeah.
Okay, yeah, go
ahead. Yes, so yeah, I see this bar here. Well, this reaction as a whole has strength because there's an inability to react with volume, which doesn't achieve anything. So again, we're disconfirming the presence of supply after a good drive up from the contextual nature of here. Well, for me on this chart, what I find of value is this bar here, because everyone would know this to be an up thrust, okay? And even though we don't close, below the previous bar, that's fine. We still reject. We still reject in this area. Yet, where is the downside follow through? There isn't. And then we just continue rallying. So by disconfirming supply here, it really, really opens up the chart for higher prices, as we can see here. So what I mean when we're disconfirming the forces of demand and supply here, everyone would know this to be an up thrust. And we should come back down here to test. Okay, this is a normal, perhaps we'd have a trading range here, but we don't. We come back down, we get a very shallow reaction, we break into new highs, and then we take off. We come back down here, we test, okay, note where we get this action here, and now we're continuing north. And this is the last reaction, and there's an inability to react. If you think on a 5-minute or 60-minute time frame, we have a mini trading range where we're building cores, and then we're just breaking up through here. So it's very interesting times.
So many questions I have, William, about
yes.
this chart. Usually, when we go, and you guys probably already could sense what these sessions are going to be like, right? So this is just us, two colleagues talking to each other about the chart without any reservations. And this is a pretty kind of like, advanced stuff as we just like jump from one subject to another. We're not necessarily kind of like going into a lot of basics, but we explain the basics as we go along. And I think this would be the key for us. Let me come back to this bar because I want to make sure that my students, understand the context of this conversation. So when this bar happens, obviously we would be thinking here a sign of strength or an upthrust situation. That's how we usually approach this type of spots when the price comes out of the trading range. So we need to figure out, is this a true sign of strength, or is this an upthrust, or if this is an upthrust action. And we obviously see that this is a sign of strength after supply that came in on this bar has been tested successfully throughout this whole year. Okay, so that's just a clarification. The second thing I was thinking.
So carry on.
I was thinking, William, let's play a game right now.
Okay.
And you and I will love playing games together because it's just like so much fun. What would you say are the most important bars? And let's play this as a game because we're going to start here. I'm going to start with bar number 1. And then I want you to identify what is the most important bar on this chart next to you. So for me, for instance, this bar, and we're going to start with bar number 0. This is going to be bar number 0. This is the most important bar number 1 or number 0. What's the next important bar for you on this chart after that bar?
This come down, lack of supply. I quite like this bar here.
Okay. So that probably, let me just guess, that probably for you represents the exhaustion of selling and stopping action.
Yes. We're holding here. What's your next bar?
Okay, so this bar. Okay, so after that, for me, the next bar of importance, and I'm gonna show mine and yours so that and here's the difference in styles, between
Mhm.
William and myself. So to me, this is the next important bar because it represents that stop in action and emergence of the demand. And I know that we're still gonna have to go through the testing period for that particular bar because there was quite a lot of supply there on the way down, even though contextually shortening of the thrust, previous stop in action, and so on and so forth. But the demand tail and the size of it suggests that demand is present and we're probably stopping. William, I'm going to
Yes.
guess your next important bar is this one.
No, it's the latter.
Oh,
This one.
this one, the
The,
next, because of
yeah.
ease of movement?
Well, yes, because we
Mhm.
break this, and we dip under. Well, here, yeah, this bar here. But this also, because of the bullish effort versus result nature of where it is contextually. However, I do like this bar here. This for me is a confirmation of that we're
Yes.
going.
And see how
This is
we're
important. Don't get me wrong, but
Yeah, yeah,
this is
yeah, yeah,
confirmation.
absolutely. And all of
Yeah.
them have kind of their own meanings, right? Their
Yes.
own
Yes.
functionality. So, for instance, the one that I've mentioned first has this emergence of demand. The next one has the final stopping, and that demand is, ever so present. And Williams bar is more about confirmation, ease of movement to
Yes.
the upside. I would
Hmm.
say, William, that the next series of bars that are important to me as identification of the, let's say, continuation to the upside is going to be the series of these bars. Supply emerges, demand emerges, testing of this demand, and then a confirmation as an ability to overcome this supply in the area where before supply was not overcome fully, and with the suggestion that we're going to go up.
And we do rally with increasing volume.
Yes. So, oh no, that's fantastic. So important. Confirming. All right. So, what's the next bar that is of utmost importance to you?
Well, I like it's a series of bars is here
Mhm.
with decreasing volume. So we get sustained volume coming down. It's not as good as the rally up, but then here, as we try to rally, we try to hold volume decreases that shows, okay, we're coming back down to test into this area, which obviously we do quite significantly with
All
the
right.
three bars.
And I kind of like this area right here in um, in light of our conversation, let's say, of the bars right here, because this is
Yes.
so different, and
Yes.
this is that question. Okay, well, how's the price going up without increasing volume signature, and then you have such a flat reaction, and does not show a lot of downward result? Well, aren't they the same? Don't they look the same? But look at the biggest difference here. So, William, could you tell us what's the biggest flashcard difference for you in these two spots?
Well, the very notion that we come down here with sustained volume, which indicates supply, and then we hold here with declining volume. So here, it's the context on the approach to the area,
Yes.
because here we rally with no demand. Well, not it isn't no demand. We rally here with characteristics which most people would associate with a poor rally, should I say. Then we encounter this reaction over here with this volume, but there's an inability to react. Here, there's two things going on. First of all, this is the high, okay? And we rally, that's okay. We could draw a channel. We become overbought here on this bar, but we don't test here. Again, that for me is a subtle sign of additional weakness. Why? Well, because we should test resistance. And look where we are. We're in the original breakdown bar, the original supply bar that takes us into new lows. So then the question is, okay, we're reacting here. You look at the volume, sustained volume. So the approach is slightly different. We've got additional weakness because we can't test resistance. We come down with sustained volume. Then we try to rally and hold, and volume declines. So so contextually, it shows me a lack of buying force. Whereas here, well, we've gone through the context here. It's just very different from my set of eyes and the way I analyze the market. How about yourself, Roman? I'm sure you
Yeah.
have a slightly different perspective.
Well, no, kind of the same. So I'm
Yeah.
not going to go into this. Again, there was a question here about, how, again, what is the warning sign if, if the price goes up without the volume signature. So I just wanted to make sure that we kind of go through
Okay.
this. But
Yep.
coming back to our game. So,
Mm-hmm.
and we're going to play a lot of game. Well, William, I like that. So this type of bars, right? So and look where they occur. So let's talk about this. Let's talk about the placement. And I would say that this is also a very important bar because, and by the way, William,
Yeah.
just a quick perspective here. On the conclusion of the runs, this is what I was looking at. Conclusion of the runs, and you kind of alluded to this as well. So um, there is less force here for the climactic action suggestion weakness in itself and suggestion reaction down. I think this
Mm-hmm.
was a very interesting and kind of difficult spot because there is a consistency of the supply, and yet
Yeah.
we are grinding down, and it's only on this bar that we cleanly kind of negate
Yes.
this previous bar, and then lack of demand shows continuation. But what's
Yeah, that's the
interesting,
context you need. We need to break under this low, which the last bar does, and then we attempt to rally, and there is a lack of ability to do so. Yeah.
and I would say like, okay, so let's just identify the rest of them. So supply with demand emerging, demand is in control, confirmation by the demand. Then look at this bar. This is the next kind of like important bar because it goes through the same level, as here. So here, 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 and then this bar. And then, a bunch of bars as we go through, let's say, this vertical absorption price action right here, and then here. So these are kind of like the most important bars on this chart. You have to pay attention to those guys. I mean, why?
Yeah.
Well, because there's a lot of action there. There's a lot of volume there. So you usually want to interpret what comes after that bar once you see that there's something going on. But William, my question to you here is that let's talk about the locations of those important bars. It seems to me that we have once at the bottom, once at the top, once in the middle, and then on the way up, kind of the same thing, right? So all of
Yeah.
those vertical absorption bars, it's attempts to go up, down, attempts to go up, down. So could you talk about the location of those important bars on the chart?
Sorry, could you? What exactly are you asking here, Raymond?
So the location in terms of like we have some bars that are occurring at the support level, at the resistance
Sorry,
level, and at the
structurally.
breakout level, and then on the way up, those kind of like profit taking ways of how supply occurs.
Okay. Well, I don't. Sorry, can you clean up the chart there, please?
Oh yeah, sure.
Yeah. I mean, when I'm looking at these bars, there is one bar which I think would catch many traders out. I think it's this bar.
Mm-hmm.
This right here. What do you make of this bar?
Well, obviously some selling came. It was not
Mm-hmm.
as aggressive as, let's say, the selling in the trading range. It
No.
also came off the attempt to continue after a sign of strength, some backing up action, and then immediate recovery. So kind of reminds me a little bit of the action in the crypto over the weekend. And we'll definitely need to
Oh
look
yes,
at that.
yes. I had a look at that shakeout.
Yeah.
We can talk about that quickly. Well, later on.
But again,
But
I like this type of recoveries and I like this type of bars because the context is still bullish. So if we see that recovery, my first thought is that we're still bullish. We're still going to continue. And that usually would define the time when the price will start moving up.
Mm-hmm. So anyway, sorry, going back to your original question here about it interacting. Well, when I'm looking at this move, I just see, I kind of see the poor reactions here. I wouldn't know what to label that bar as, to be honest. And then here, but the very way that we break through resistance areas. Look at how this one bar engulfs all of this action. Okay, and then here, this drive up engulfs all of this negativity. Then we try to react down here, and then we get these two bars pushing up. Okay, so you can see all along here that the buyers basically are in control. I mean, even from here when we break through. But looking back here, when I'm looking at within this trading range, what I like to see using our comparative relative analysis. So this was our first down wave. This was our second down wave. Not as intense as this. However, here, look at the buying thereafter. From the lows to the highs. Look at the quality of the spreads pushing up. It takes all these bars to come down. Okay, what 12 bars or so. Then we rally up on 4 or 5 bars. So that to me indicates there's good demand, you know, within here. But then we get this wacky bar, which doesn't really, you know, we'd label this an upthrust. But then we hold at and look at the way we break through here deep into this bar. Then we react and we hold. And this is where we get that supply kind of imbalance on this bar here. And then again, look, we break through on 2 wide spreads. So all I see here is strength from a pure price action take, if you will, by using our comparative and relative analysis.
Yes, and also I want to add to that a little bit on the behavioral side. I mean, this whole action right here, if we would be asking, like, what is going on there, or what are market participants doing there? So to me, it feels that the sentiment is still somewhat bearish for weak hands. Why? Because we just came out, we had a big event. Let me just clean this up a little bit. We had a big event in this bar right here. And then they're saying overbought, 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 overbought. And what do? I mean, like, how do they function in this type of, you know, environment where their sentiment is opposing to the actual bias? So what they do is they hedge, that's number one, and they profit take. Or maybe even closing some of the positions completely, so they're distributing. And this is kind of like that moment where weak hands are distributing their supply, whether partially or altogether. And then the strong interest is just coming in and they're just saying, okay, well, I'll take it. I'll take it.
Yeah.
And, you know, it's so interesting how you could see and read and extract the sentiment from the chart. And William, I started calling this the behavioral market analysis, you know, just understanding as to what market participants are doing right there. Well, let me...
I mean,
finish.
Sorry, there's 2 things I'd like to talk about. Now, we trading 101, what we're doing here is we're building cores, and now we've broken out, and we have more length of line to go to the upside. That's number 1 here.
By the way, what a fascinating way of measuring the cores. Kudos to you for doing this, because I mean, like, visually, I always would say, like, students would ask, okay, is this enough cores for me to open the position right here? Well, what do you think? I mean, like, look at the cores, look to the left. Is this enough? I mean, like, to me, this looks like a substantial cores for an intermediate type of move. But your idea about the length of line, is it length of?
Length of line, yes.
Level line is just brilliant. So what do you see?
Again, it's a visual reference that just aids me. And also, there's something different contextually about this last drive up here, isn't there? From here, the way that we grind up into new highs is very different. Look at the price action, good price action, good price action. Kind of sloppy here, but good price action. So I think here, you can see the difference there, Rem. You can see what I'm trying to get at. But now there is a confirmed lack of supply in this market from this bar, and the very notion that we drive up with declining volume and we hold here with this increasing volume is producing it's the stage is set for higher prices. That's what I see.
And possibly even acceleration melt up.
Yes.
If supply is so low and we don't react to the smallest of the supply that comes here, then, well, what's ahead of us? I mean, like, what's stopping us? Really nothing.
Yeah, there's nothing there. We're in blank space. Very interesting. It's quite an interesting chart when we look into it into depth like this.
Yeah. Well, William, let me come back to this question. And again, I'm thoroughly enjoying the conversation. That's number one. Secondly, you know, guys, as you follow all this conversation, I don't know. Just let us know. Just give us your feedback. Do you follow it? Do you need more basics and so on and so forth? I wouldn't want to go to the basics, William. I mean, like if somebody really wants the basics, we did the tape reading basics.
Mm.
With David, Gary Follett was there as well. William was there. I was there. So, guys, if you need basics, go and purchase that on-demand video. So let's come back to the original question about accuracy. So let me
Yes.
ask you this question in a different way.
Okay.
What would you say that for you personally, and I respect so much, the way how you analyze the market and the way how you trade, and I know some of your results. So it's up to you what you want to kind of like tell at this point, or whether you want to say anything at this point. What would be your standard of accuracy for your trading? I mean, percentage-wise, win and loss.
Percentage-wise, well, for those who follow my work closely, know that I take setups to the nth degree, and I have variations of setups. For example, we're all familiar with the spring. I'm sure this is an advanced level of discussion here. So I will have variations of spring. I will have a spring from accumulation. I will have a spring from local support. I will have springs in a downtrend, springs in an uptrend, springs, etc., etc. Momentum springs after a first drive up. So I don't categorize all of those springs together. So within my variations of springs from accumulation, I have a very high success rate. I think that's late 70s, 78, 79%. Whereas springs in a downtrend, I think they have like a 56, 57% success rate. So if I amalgamate those kind of figures, I don't get a true reflection of the setup itself. That aids me going forward for obviously risk and position size. I trade also the expectations of the trade, like the expectations of a trade taking a spring in a downtrend. My main target is previous swing high, the next level of resistance, because it's more or less a counter trend trade, especially if we've had 2 or 3 legs down. Whereas a spring from accumulation, just say we accumulated, well, we are buying down here, and we spring down here, and we get good level, and I can see this cause built, I will always partial cover at resistance. But I'm much more likely to be will hold the trade, especially if we break out into new highs, because of the cause behind us. So it's contextually, it's difficult to try and pinpoint, the parameters for any given trade, because it's very, very context dependent, and I keep using that word. But and also the spawning ground of the spring, the context, its origins, if you will, and obviously that comes from the background conditions.
Right. I probably had to be more specific with this question, William, but I think what you're covering is what are the high probability outcomes for the setups that we teach to our students, right? So a spring would be a high probability outcome if analysis obviously was done correctly. So you're identifying that type of probability in that type of setup in those type of contextual conditions as over 75% success rate, right?
Yes.
And obviously, this question could also have been asked in a different way. So, for instance, I could ask you, in your own trading, with your own experience, what would be that kind of like threshold for you as a goal, as a quantitative goal? Like, for instance, I would say like, I want to be correct like more than 50% of the times on my setups, but I know that you're much, much higher than that. So
well, yeah.
Go ahead.
No, sorry. So what is the question? I'm just trying to.
Yeah. So the question that usually comes to us is like, somebody, especially new students that come and they ask, well, what is the probability of this system? And to me, that's kind of like a very
hard question.
Well, it's almost like it's a question. It's an intelligent question that comes from the naiveness of somebody who doesn't know the method.
Yes, I mean, I mean, you can show 10 Wyckoff's accumulation process, and you and I, we all enter in different stages.
Oh yeah, for sure.
So, I mean, it depends on your risk tolerance as well. It's a very fully loaded question. And it comes down to risk management as well. I mean, I've mentored this one trader who trades every spring and upthrust, okay, regardless of context, and he has a very low.
If you would have this task, William, right? Like, regardless of the context, you take in all of the sprints and all of the
Yes,
upthrusts, and then your
what's
last sprint and your last upthrust are going to fail for sure in different contexts. Then you could establish that quantitatively, that this method based on the sprints and upthrust. And then also there is obviously a question of how do you define the upthrust and the sprint, right? Because for different traders, the definitions could be different based on the time frame, based on how it looks, based on the confirmation, and so on and so forth. So, I mean, but still, this question of, like, if you would put upthrust and sprints only, then you could quantify that. But everything else is kind of like, it's hard to say.
It is. It's incredibly difficult to say. Yeah, I mean, it's a fully loaded question that it was going. You know, we're going internal now. We're going very, very deep into, because it's not only your ability to be able to read the charts. It comes down to understanding your role within the markets and how you want to manage your trades, etc., etc. It's
And William, I think that we are going to have those type of discussions, how we trade, because this is how we usually talk. I mean, like, guys, obviously you haven't been present at some of our meetings, but we enjoy talking about execution as well. Different styles, you know, different understandings, you know, how we are looking for trades and so on and so forth.
I mean, I think the one thing that I do slightly differently is that I have repeatable in my mind, or in my process of approaching the markets, is that I like to have repeatable setups that I can identify time and time and time again. So when trades fail, and they have failed in the past, and they still fail to this very day, that I'm able to learn from those trades to be able to tweak my setups and perhaps trade management. I think that's kind of really the only slightly difference within our entries, especially as I think you like you're very good at preempting the next leg up.
With the size.
Yeah, entering. Yes, you can read the market in the turns very, very efficiently. Whereas I prefer to wait for a confirmation. Again, I completely understand where you're coming from.
And I totally get what you're doing, because what you're basically doing is you're looking for those very, very kind of like high probability spots.
Which you don't need to do to be successful. It's just how my mind works. I understand my role within the market.
Difference. And I think it's so important for, like, you know, our students who trade the markets actively to understand who they are in terms of the style, you know, in terms of the execution, in terms of, well, what are my spots? Am I feeling more confident with like a high probability spots, or am I like Ramon, where, you know, I could just like add if I'm seeing, you know, a lot of confirmations along the way. So, and maybe there are some other styles that, you know,
oh yeah, for sure,
you and I, we don't even, like, you know, we understand them, but we don't use them necessarily. But I've seen your trades, and we've talked about the results. So without talking the numbers specifically, you know, I'm very impressed because this whole idea of high probability setups and high execution at those spots, it increases win to loss ratio.
It does. Yes.
Whereas for me, I'm kind of like in the flow of supply and demand. It's almost like, you know, and you know this feeling. You sense it. You feel it, right? Do you have that, William? I'm sure you do.
Yeah. I mean, I think we have discussed this. When I first started trading, I traded on one or two instruments, mainly the ES, as many professional traders do. And I used to trade with the flow of the market, and I'd be a lot more. My setups wouldn't be so defined. I would just like be in the moment and understand the supply-demand imbalance. I'm sure we've all had those days where you can feel the market's ebbs and flows, and you can enter accordingly. However, for whatever reason, I don't know how, I wouldn't call it an evolution. Perhaps an evolution for my role within the markets is that I changed and I wanted to trade, say, 20 markets. So to be able to trade those markets, you don't have the concentration power or the time to monitor the full ebbs and flows of those as you did with one instrument. But due to my time trading one or two instruments, I was able to identify and categorize my setup so specifically that I could apply those within a multiple market. So it's kind of evolved that way, if it were.
Well, would you say that at this level you kind of feel, and I think I know already the answer to this because we've talked about this. Do you feel more comfortable like following 20 plus markets and looking for those high probability spots just because, you've done this for years and years. You put the work behind it. And I think a lot of people just, I kind of, when I look through students, and what they do and how they go through the path, because you guys are on the same path as us. I mean, like William and I, we're on the same path as you. In your mind, you might be just like putting us a little bit above yourself in terms of the knowledge and skill and so on and so forth, and appropriately so. I mean, like we do this for a living, we spend like, 10, 12 hours a day just working on that. So we should have that, skill. Having said this, I see William a lot in students that, oh gosh, and I lost my thought here, but let's come back to the number of trades. Like, would you feel you're feeling comfortable now going through, let's say per day, like through 20 markets and then defining those selection opportunities for you?
Yes, and I must specify that although I may monitor 20 markets, I don't trade 20. It would be perhaps 4 or 5 out of those,
And that's appropriate, right? Because not all 20 are going to have that high probability setup at that moment.
But you do lose a slight touch of the market you're trading when you're trading multiple markets. You don't fully, you're not fully connected, but I don't need to be, if that makes, because I know my strategies inside out. I don't think the majority of traders, I'm sure you could agree here, is not the lack of knowledge. I think it's the lack of execution power, or there's something, or self-belief, or
well, to me, it's about 4 things. Number 1, knowledge.
Yes.
So if you lack knowledge, you will fail. Then after that, and I usually have a saying, to my students, knowledge is not the skill. If you have knowledge and you don't have the skill, you will fail. So you need to develop the skill to recognize those high probability spots and to be able to execute them in a profitable manner. Then number 3, a process. You have to know, what you're going to go through each day, each week. And if you don't have the process and your environment is unstructured, you will fail. And the third one is the mindset. And the mindset is something that William and I, we've talked a lot, when we meet and when we talk about trading, because it's a progression. These 4 items is the path. It's the progression of any trader. We come and we are thirsty for knowledge, and we think that the knowledge will set us free. This is such an illusion. It's not even funny to talk about. Then, finally awareness comes and you're like, okay, well, how do I do this? I mean, like I have all of this knowledge, but I'm still unprofitable. I need to figure out how to see this on the chart. And I think a lot of people are just stuck there between knowledge and skill. And then after you acquire skill, well, I see this on the chart now. Well, does it mean I'm going to make money? You're going to make more money, but you're not going to make money consistently, and you're still going to fail. So you need to figure out, what do you do from the moment that you wake up to the moment when you go to bed, and how trading is actually a part of your life. And what do you do to prepare for your trades, on the daily, weekly basis? Once you have that, you have... Go ahead.
No, sorry, yeah, I was just going to say that the process and skill for me have been they're highly amalgamated. I think a lack of the skill section, number two, and the process is from a lack of practice, the
Absolutely.
lack of hours, the lack of screen watching,
And
and that
William,
will have an effect the mindset. They all
okay,
work
so
together.
let me ask you this question. At this
Yes,
level that you are,
yes,
do you practice?
yes. 40 minutes a day,
Okay. So I
40 minutes.
practice also almost each day.
Yes.
Either this is through classes, through the preparation, through going through my charts, going through some backtests and simulations and so on and so forth. You
You
have
have to.
to practice. And this whole idea of like, oh no, the practice without the actual money on the line is not effective. Not true. And when I
No.
hear this from a student, I right away know what this student is about, and I don't want that student to be in my class, because there is a collective understanding in the classroom among students as to why we are here and what we're doing. We're here for improvement. We're not here to
Hmm.
hear those negative thoughts about practice. So I usually try to quickly kind of like get rid of this type of students, and for them to go, and they still need to be on this path. So they will come back to me, or they will come back to us at some other time when this whole idea of practice becomes ingrained, and then they see the value of it. They will come back. Well, what about the mindset, William? I mean, like, to me, that's probably that next final step, because I always compare myself like running. Um,
Hmm.
and then as I run, let's say I have a lot of knowledge. So this was like a one rubber band that was holding me back. So
Hmm.
I have enough knowledge right now. Then the skill, and then I have enough skill right now. Then the process, I've established the process. That's great. And then that last one rubber band, that is kind of like I'm running, but it's still holding me from running faster, from trading with more efficiency, more optimally. So this is the one that I'm working on a lot, and especially lately. So what are your thoughts on the mindset in trading in general?
Well, the mindset, obviously, I think it's one of the hardest. It's the hardest ones to acquire, to develop, should I say? It's. I think the mindset, how I've developed my mindset is through the continual, ironically, the continual practice, the continual daily practice. Once you once you've done something 10 times to 100 times to 1,000 times, it alleviates what you see in real time, and you're able to pull the trigger.
Bingo.
Uh,
Exactly. When you practice, and the mechanics become so easy that you
kind of
don't
muscle
think
memory.
about analysis or execution. You're
No.
mostly concentrating on like, oh, what's my reaction to this? But because
Yes.
you've practiced this, what is going to be your reaction? It's going to be less aggressive, right? So you're not going to resist to an opportunity to trade and to see something that you've learned and then you practice so many times.
Hmm. I think what I see a lot of people do as well. Some students who have a high knowledge, and perhaps they do have a high level of skill. When they encounter not failure, but an unsuccessful run, they reach out for adding VWAP or market profile, or trying to
Right.
amalgamate something else into the process of primarily Wyckoff, VSA, etc., rather than going back to identify that there is actually a weakness in their game and then overcoming it. I think it's much easier to look externally and look for something else to try and implement it, rather than acknowledging that you have a weak area in your game. And I think that's incredibly hard for a lot of people to do, because it's to do with the ego, isn't it? You have to acknowledge that you are making mistakes and you are weak. But at the same token, you need to understand that our methodology, everything you need to be successful within the markets is there. The knowledge is there for you to extract X amount of points from the market.
Which, mhm.
Yeah, which I find very, in my early days, I found that very fulfilling. I know that you don't need anything else. That's not to say that once you reach a certain level that you can implement any other any other form, but you need to master it first, understand it. But how ironically, however, when you get to that level, you realize that you don't need anything else.
Yeah.
So you carry on working on your. I mean, I still learn. I learn with Roman when we meet.
Absolutely we learn from each other
Yeah,
so much, and
well, almost for
that's why
everybody.
we're here. That's why we're conversing. We just love talking about this stuff so much. Um, uh, I'm gonna come back to the high probability trades. So how crazy
Yes.
I am with all of this positions and add-ons, and that I'm trading with the hedge fund right now. So
Yes.
how many positions do you think I have currently? Just guess, wild guess.
18.
18.
Yeah.
I've got 50 going
50.
on.
Okay. Wow.
50. Yeah, and this is a little bit crazy, but you have to understand that I'm trading on in different time frames. I'm trading a different market. So, for instance, my hedge fund, which is primarily just cash positions, long-term oriented positions, right? So we have around 35 positions right now, which is for the hedge fund is probably just average number, so to say. And the rest is just in the personal account, and I do trade options on stocks. So I have around 10 plus positions there, and then I just started. William, you're gonna say like I'm crazy. I started trading cryptos this weekend. So
Oh, you did say you was going to
yeah,
enter that.
so I'm gonna.
I've still yet to enter that arena.
Oh
Although I
well.
did see the shakeout this weekend.
Well, it's kind of like very reminiscent of just all of the currencies in general. But I just wanted to kind of conclude that thought. So we are different, obviously, with William in the way of how we even analyze something. I think that maybe analysis, William, is kind of the closest for us, in terms of how we interpret the data. But then probably, going further, execution, the number of trades, where we are coming into the position. How do we scale in more? Like I like to scale in. William likes to go with the
Yes.
full size. That was a big difference that we found.
That's a big difference. No, that's not to say if I enter, where's the pen? If I enter down here, and this is resistance, and say this is a spring, I'll cover a third or a quarter.
Yeah.
And then if I see that we react and we push up, and I see this reaction here or here, I will add that final third. So I do add once I've extracted points, but it's very rare. I mean, primarily I'm an intraday specialist, but I do have a swing trading aspect to my game. But I enjoy. I think you enjoy the higher time frames. I just prefer.
Well,
the
I
smaller
just
time frames.
don't necessarily have a lot of time for the intraday, even though I've traded intraday for so long. Like I've traded forex on the intraday, I've traded e-minis on the intraday, stocks, futures. It just was just good times. But I'm getting older, so and just being busy. It's just it's hard. And that's why this whole idea of the tape reading, except instead of the chart reading, is just not appealing to me. Just because it's just so time consuming, you have to be so ever present there in front of the screen. But what's interesting with my positions right now is that well, first of all, majority of them are profitable. And different time frames and so on and so forth. That's understandable. But I think that the reason why majority of those, and it comes as a confirmation, to our analysis of the S&P here, is that we're at a very interesting spot. We're just at the spot where a lot of the stuff is just going up and it just still have the trajectory to the upside. So it's kind of like a very unique environment for my portfolio, just in general, where out of 50, let's say 45 of them are profitable, and then the 5 are just kind of developing still. So I've never been necessarily in this position where I have so many positions, and then so many of them are at this spot contextually profitable, suggesting to me something that, wow, we are in this environment do you ever have that, like with your portfolios, with your position?
I don't think in those terms, but I do. I kind of use that saying, you know, make hay when the sun shines, and we're in that environment. It's. I mean, we can just look at this chart. You know, cores, like we said, and as we push on up here, the buys are in control, and we know that because we've broken out. We move into the upside, and it's the sellers that need to prove themselves, and I just don't see it. You know, here we had the potential for a more meaningful reaction, but we don't. It resolves itself with ease of movement to the upside and then inability to react. So, I you know, what's the next logical place? 4,000 is a psychological level. I'm sure you've done a PNF chart for this, perhaps.
Yeah, over 4.
So over 4,000, yeah.
Still a room to like accelerate and run up.
Yeah, I mean, if you just use the length of line, you can see that we've definitely got a lot more room to go to the upside until the market proves us otherwise, right?
Absolutely. And that's the thing. Even yesterday, like on Twitter, there was a question. Well, again, what do you think? The price is going up, but the volume is not confirming. The answer is very simple. Until substantial selling comes, until substantial change of behavior occurs, and like here, this was a substantial change of behavior that suggested that, you know, we are done with this environment right here, and we're entering something else. And I mean, textually, the texture of it, you could see how the texture has changed. Texture number 1, texture number 2, texture number 3 now. So the price moves differently.
But the market had the right to test here and still remain bullish, and this was the resolution. So in other words, you know, we're still going higher. That's the way I kind of.
Well, let's jump really quickly to you know, the cryptos, because I'm sure, well, first of all, quite a lot of students are trading cryptos and so on and so forth. And we had this kind of like a low liquidity weekend with the Chinese New Year. By the way, Happy New Year to everybody, to all of our students in China. And, you know, that produced a little bit of the volatility. So, William, I have here my regular screen for cryptos that I do. We just launched the Discord group for cryptos. Alessio is running it, our crypto trader. So check it out. But we have the Bitcoin, the DeFi, which is kind of like a growth index, shitcoin, which is the small caps. And then
I've never heard. I'm not familiar with crypto, so that's quite.
Yeah, I was surprised too. And then just a bunch of different crypto assets. So you could see those kind of spikes, demand tails. And I wonder, what's your first initial impression of those?
Yeah, if you could expand Bitcoin, I did have a quick look actually, and I think, yeah, if you expand it, yeah, you get this high volume down bar right here, and it looked like supply, and you have to ask yourself the question, what did it achieve? Absolutely nothing.
Yeah, I like this area right here.
Yeah, we got a good call.
Where, you know, we were coming out of here, and our analysis was like, okay, well, we still could be in the trading range, but you know, this action right here is interestingly almost like negating that idea, unless obviously supply comes in very aggressively right here. But it's holding, and especially after this, you know, shakeout, which you see more in other crypto assets.
I was looking around here. You can see it's a little bit more defined, more aggressive. Certainly on other instruments.
Well, let's go through some of the trades, and this is what we want to do as well. So we want to go through the markets. That's number one. We want to talk on the high level about, you know, basically any topics that, you know, we want to talk about. I want the conversation flow, and I think that we already established that. And then we want to talk about some trades, so maybe like from last week or so. So you guys have to bear in mind, this is my first trade or first trades in crypto, so I'm definitely not that familiar with the market, and I'm heavily relying on Alessio's selection for us, and he's been so outstanding. So it's just very nice to see how he has developed into such an expert, Wyckoff expert in cryptos. So I'm looking at this, William, at this whole, upslope in rise. What I'm
Mm-hmm.
seeing here is that the rallies are very aggressive,
Yeah.
to the upside. So I'm liking this. And then I'm seeing kind of like a very usual for cryptos pattern where you're going to have some change of behavior shakeout, and then you have quick recoveries shakeout.
That's an important distinction you've made there already, is to understand the character of the instrument, that it likes to do those kind of shakeout reactions
So
rather than disconfirming supply. It
yeah,
likes to shake out. And that's an important aspect of
very
understanding the
important, very
instrument you
important.
trade.
And
So, yeah.
it's especially like I remember when I was trading forex, that was a very important distinction because in that
Yes.
market, exporters, importers, they come to that market, they don't care. They're going to dump whatever they have, and
Mm.
because they need the currency conversion right now, and that could create that type of shakeout, or maybe like intervention by the government could create like a 200 pips type of move. So it reminds me a lot of how the currencies moved. And rightfully so. So the trade was initiated right here on this breakout, and this is 15 minutes. But on the hourly, what I saw is that there was this downward bar,
Mm-hmm.
and we've just discussed this the other day, if you recall, and then the upward bar, and then we're breaking through this level. So some context here, like a trading range. And
Mm-hmm.
then we have these two bars. So a breakout here to me is very valid. Why? Because supply is coming in on this bar right here, and then the next bar is a disconfirming bar with that supply. So therefore, you know that the price is going to go up and probably going to accelerate at that point. So and it did exactly that. So that was a point of entry. And I was thinking, William, because of this whole volatility, I put the stop really conservatively below here. So, which I'm glad that I did.
Yeah, that's yeah, oh yeah, was a test down here. But the nature of this breakout here, like when we analyze the market and you see it interact at price and support and resistance, and you see and you want to note how it approaches support and resistance, and notably how it breaks out. So when we look at this breakout, look how many levels this drive up is breaking through here, here, and here. This is strong. This is a very, very strong breakout because it's breaking through 3 levels of resistance where the market could potentially find selling, and it doesn't. There's no ability to react, which is a superb kind of subtlety on understanding the nature of the breakout itself.
Well, let's go further and let's just analyze this chart.
Okay.
Yes, I concur. The breakout was just like beautiful because it
And
just shows a
I'd
lot of
like this.
strength.
I think that's
What?
the best setup here.
Oh, so that is your side. I was about to ask you,
Yeah,
where
and
where
then
would you look
we'll
for?
be over. There's so many layered textures to this setup here. To back up to the edge of the creek after the breakout, as we come down, we'll be oversold within the channel. And if you have a look at the bottom, you can see the demand towers coming in. I mean, this has just got everything going for it on and obviously we're testing in where on this breakout bar here. And as we try to come down, volume declines, and then we're met with good buying over here. As we know, the market, this was the volume over here via the breakout. We're trying to test down here on declining volume. Odds favor, like we talk about high odds, low odds plays. This has extremely high odds due to the fact of the context of analyzing the breakout, seeing the volume on the breakout. We're oversold in the channel as we come down. Volume is declining. We're met with good buying, etc., etc. So contextually, that all works together for a very good highs play. Although I have not, disclaimer, I don't trade this, but I can see this on the chart. It is.
Well, let me translate what you said for our students, for our today's audience.
Okay.
What I really like about the way how you kind of come to this place is that
Mm-hmm.
first you see the actual action of strength.
Yes.
So then you're looking for um, a counter to that strength move, counter
Yes.
counter trend, which still is confirmatory to the overall bias, which is bullish. So you could see this, first of all, like in this area right here. This suggests strength because we're seeing higher highs, higher lows after the breakout.
Yeah,
And
we can
this is
see the widespread bars breaking out. Yeah.
And this is the whole formation right here. Like to me, this is the trading range. So you see how into phase B, into this upthrust action, you have a lot of strength with what the price is showing. And the first initial stop in action, the supply actually came right here into this close. And then, as William was saying, point number 3. So if this is 1, 2, then this is 3. 3 is just a confirmation of the overall strength. That's number 1. The ending of the short-term counter move, number 2. And the third one is a confirmation of the actual reversal. So I kind of see that in a lot of your trades and explanation of your trades, this sequence of concepts that are coming to your point of entry.
Yes. I like confirmatory setups, strategies. Again, that are repeatable. But yeah, in essence, in fact, I do think that the volume does increase a little down here, to be fair, but it ends, look at this volume, climactic. And where does this climax occur? Perfectly in the oversold condition within a trend channel. And for those familiar with, with the work or understands of Wyckoff, this is an extremely common concept. An oversold climactic move into an established channel.
But
20,
it is supposed to come here. And I mean, this volume.
Yeah,
it's very logical that it comes here.
Very logical.
Yeah.
And look at the demand tails. It gives you 4 opportunities to jump on board. It's fantastic. And obviously, we're in this area of the breakout, which is.
I wonder how you would handle a trade, let's say, like as you were talking about this trade. So let's say that you're entering somewhere, let's say here.
Yeah.
Would that be the one? Did I guess it?
Yeah. I mean, this one or this one. Yeah. Either
okay.
Yeah.
So what are you doing with the stop loss? How do you manage it?
Stop loss would always be previous swing low. But when we break the highs, you can adjust accordingly. But as we move on higher, we can always note, look, we're making lower highs, which is good. But for trade management, as you know, trend channel, we do become way overbought. Yes, climactic. And then we see shortening of the thrust to the highs, this move to this move. So we know something is already. We draw the demand line. We break through. I mean, my line the market has the right to come back down here to test, and it does. Okay, from this swing high over here.
That was my next question. Where would the danger zone for you to start?
This is my line in the sand here.
Okay, yeah. So somewhere on the way down?
Yeah. So, I mean, when you see this slamming down here, because we don't... Again, these are the subtleties. We push on up here. Okay, we don't test up here to resistance. That's what you want. From a spring, you want to see it break the previous swing high, and we don't do it. That's up here. Then we come back down, and then look at this. Very weak, low volume. Yeah, this is a no demand into this area. This breakdown here, and this breakdown here. Like, ooh, something's wrong. And then we can see these 4 bars. They wipe out all of this attempts to rally here. So there's a subtlety going on in the price action of these 8 to 10 bars here and these 4 bars. So, and then this is the rally. So when you piece this all together, and as you've put in here, the trend channel, look how we break down. That is supply coming in. So if I was to hold here, this would be my line in the sand, and then I'd be stopped out for X amount of contracts or however the...
yeah, everything happens so fast here, in terms of the shakeout. By the way, look at the recovery, from this low. This is kind of like a COVID type of recovery, the B bottom.
Yeah, I mean, there's again, sorry, can you clear? Oh, yeah. Again, we break down, okay? This was support. We break down, this break validates this level. So when we come back down up here to resistance, we should expect a reaction. And there's an inability to react. Why aren't we coming back down here to test if the market is indeed weak? But we don't. We break through into new highs, and this is the reaction. So again, this market is displaying some strength here. It certainly is displaying some strength. So
Yeah, I mean, like if we go from bar to bar, right? So
yep.
strength on the tail, strength on the next bar, strength on the whole rally,
Yep.
strength on the limited reaction,
Hmm.
strength on the flatness, strength on
Yes.
the breakout, strength on the breakout. Again, reactions are small, and
Yep.
still strength. I mean, like
Yeah.
it might actually just, retest at some point, but I think this is the value zone right now. So we
Yep.
kind of like right here where we're retesting, like,
Yeah, this
what,
is the
what,
congestion area, isn't it? Like
mm,
this is where it's going to take some time to perhaps absorb through. But look how we've broken through. Just the subtlety of breaking through the highs here. Break, break, break. I mean, this is all bullish price action, and we have another, like you said, COVID kind of V spike, don't we? Which are occurring. That's definitely more a frequent pattern that's emerging post COVID or post
yeah, the
COVID for
problem
sure.
with cryptos is they are 24/7. So, and I'm so
Yes.
unused to this. I remember I was trading Forex like at night because I'm on the Pacific coast here.
Mhm.
When I was younger, and it was just crazy. Right now, I can't do that. I mean, my family situation as well.
Yes.
So
Yes.
it's just a little bit hard. You want to rest, but let's just say in the context of the trade that I have right now,
Yep.
where
Oh
to
yes.
you? Yeah. So this was the point of entry.
Yep.
So
That was
where
it.
to you would be an appropriate high probability add-on?
Oh well, you know what I'm going to say. I want to see a breakthrough. You probably bought? Did you add on here?
No, I bought it only right here. That's it.
Oh,
That's
oh,
the
so you've only you
that's the
haven't
only
added.
position that I have. But I think that yes, I mean, like this makes a lot of sense to me because the price comes back after the short-term,
Yeah,
shakeout.
the way that we break and then inability to react, and we've got the V spike formation coming on is just all, what we know of these conditions, and these conditions are kind of new. Like I haven't been I'm very familiar with this kind of V spike action.
Hmm.
Before it only happened 13-15% of times
Yeah,
statistically, but
them.
since COVID,
Yeah,
I've had to analyze a lot more V spike
yeah.
scenarios for sure, because they're becoming more and more apparent, especially if you're trading
Hmm.
crypto.
And I think that it would be a very difficult spot for an amateur. I mean, just to add there, just
Yes.
because of how quickly it recovers. There's no really like uh, a really like deep contextualization of the structure here because one might think, well, we actually in some kind of distributional formation right here for this move down, and now we're just recovering out of that, and we don't have a trading range. And I
No.
think and I made this mistake by the way around the COVID low. So I had called the low on March 23rd, but the idea was that we're probably gonna lose some volatility through testing action like this, and then when it just went up so drastically, then you see a different pattern, and you're trying to
Hmm.
catch it somewhere on the shorter term reaction and then continuation to the upside. So that was much easier. But this is a very difficult point of entry. Would you do this yourself? I mean, in real
No,
time?
no. As you know, I don't trade breakouts. I use them as background conditions of strength. Well, the point of entry, I'll be looking down here on the first reaction, probably on a slightly lower time frame, which would be here after the drive up north.
All right.
But for you understanding in trading these V spikes on, like people speak about or traders speak about market conditions. I do think it's an adage or something to spend time on, especially if you're new to trading, because these environments are slightly different. I've never traded these V
Mhm.
spikes. That becomes, like I said, becomes so apparent, which is good because it keeps us on our toes, isn't it, Ram?
Mhm. Yeah. All right. Well, William, we are at 10:33 Pacific, so this is
Oh
where
wow,
we end our first discussion. Yeah, it was so
that went
fast. Wow.
extremely good. Yeah.
Um, I really enjoyed it. So I'm so grateful that you said yes, and that we're talking. So I think that maybe the next session we'll still have free. next Monday, and
Yes.
then we'll,
Yeah, we'll discuss some trades and some general overview of the markets and the indices. I think
yeah,
it'll be
and I think that we
useful.
also, there is a lot to discuss always, like with Will, and
Yes.
we just keep talking and talking and talking.
Yeah.
So you guys, hopefully you are enjoying this conversation, and you're extracting some knowledge from it, because when we were discussing, we said, like, let's not go to the basic level, let's just stay at, like,
No.
at a little bit higher level, so that it would be interesting, to a lot of people and to ourselves, as well. So, and I think that this was exactly the session that we were envisioning. William, thank you so much for
No,
this
thank you. And
delightful
thank you.
conversation.
Yes, thank you, Roman. And thank you to everyone who's watching. Appreciate that.
All
And
right,
if you
guys.
do have any questions, should we hold a Q&A session for next week, or perhaps?
Um, for now, I have enough questions for you.
Okay.
You know what, William? Why don't we just, like, see how it's gonna go, right?
Yeah,
So,
yeah, of course.
but yeah, there were some questions, and I think that you will be able to see them. I'll walk you through this, where you can see the questions. Yeah,
Yeah.
people were asking some questions, but I just kind of want us to stay on path, stay focused with our discussion. So we'll
Brilliant.
see. Maybe some of the sessions we could devote to questions, but my preference is just for the thought to flow and not to
Yeah,
be
just let questions
interrupted.
arise
Yeah.
organically. Yeah, brilliant.
Yeah. All right.
Well, thank
Well,
you very
guys,
much, Roman, and enjoy the rest of your trading day.
absolutely. And thank you guys for being here. We're going to have another free session next Monday. And then after that, we'll go into the subscription mode. So if you like what you're seeing, if you like the discussions, if you feel like this is the value that you were looking for, let us know. And, once we set up the landing page, this is the state of affairs right now. We don't even have a landing page or anything. It's just kind of conversing with
Yes,
the
we're trying to
colleague.
feel our way, and
Yeah.
something will rise. A structure will form itself.
Yeah.
But I
So,
thoroughly enjoyed myself, Roman. So thank you once again.
yeah, me too.
It's
Well,
always good
thank you so
talking to
much,
you and
Will.
hearing
Have
your
a
perspective.
wonderful week, and I'll talk to you next Monday.
Okay. Thank you.
Thank you. Thank you, guys. Bye bye.
Thank you, guys. Bye.